Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LUMENTUM Holdings INC quarterly report. LUMENTUM Holdings Inc. offers a diverse range of businesses and services through its two segments, cloud and networking and industrial tech. Key areas include optical and photonic chips, components, modules and subsystems for cloud data centers and network infrastructure, short-pulse solid-state lasers for semiconductor, device manufacturing kilowatt-class fiber lasers for solar cell production diode lasers, for display manufacturing gas lasers, for electric vehicle and battery manufacturing. LUMENTUM Holdings Inc. Stock price skyrockets. A year of exceptional growth in a remarkable display of financial prowess, LUMENTUM Holdings Inc.'s stock price has surged an astonishing 223.4% over the past year, reaching an all-time high of $232.75 in November 2025. This meteoric rise can be attributed to several key factors. Exceptional earnings growth, with a staggering 1,366.67% year-over-year increase in last quarter EPS, has been a major driver of this surge. The company's consistent ability to surpass earnings expectations, averaging 19.06% over 4 consecutive quarters, has further fueled investor confidence. Strong revenue performance, with net sales reaching $480.7 million and a 55.92% year-over-year growth in the last quarter, has also contributed significantly to LUMENTUM's success. Improved profitability, with a notable 44.37% profit margin in the last quarter, is another key factor. High institutional holdings, at 100%, reflect significant investor confidence and a strong market position. The stock's technical firmness, trading well above key moving averages, confirms sustained buying interest and positive momentum in the market. Overall, LUMENTUM Holdings Inc.'s exceptional financial performance, combined with robust operational performance and high investor confidence, has driven its stock price to unprecedented heights. The primary drivers of revenue growth or decline can be attributed to a combination of internal and external factors. Economic conditions, such as recessions and inflation, have a significant impact on revenue growth. Companies must also stay competitive by innovating and adapting to changing market trends and customer requirements. Regulatory challenges, intellectual property issues, and human resources management are other critical areas that can affect revenue growth. Compliance with laws and regulations, protecting intellectual property rights, and attracting and retaining qualified employees are essential for a company's success. Additionally, environmental and social responsibility have become increasingly important factors in driving revenue growth. Companies must consider the impact of climate change regulations, investor expectations, and customer procurement policies on their bottom line. By understanding and addressing these key drivers, companies can make informed decisions to drive revenue growth or mitigate decline. Net income and profit margins. A turning point, the financial performance of a company has shown significant improvement from Q3 2024 to Q3 2025. Net income shifted from a loss of $82.4 million to a gain of $4.2 million, indicating an impressive increase of plus $86.6 million. Profit margins have also seen a notable change. The gross profit margin rose from 23.1% to 34%, while the operating profit margin improved from -24.4% to 1.25%. These improvements can be attributed to two key factors: the release of valuation allowances on UK deferred tax assets and internal restructuring efforts. However, despite these positive changes, there are potential risks that could impact future profitability. Gross profit margins may decrease due to rising component costs, logistics expenses, inventory balances, and pricing pressure. Additionally, supply chain constraints and disruptions in production or delivery could lead to a decline in revenue and profitability. The company is generating positive operating cash flow, a significant improvement from last year's figures. For the 3 months ending September 27, 2025, the company generated $57.9 million in operating cash flow, compared to $39.6 million for the same period in 2024. This increase demonstrates the company's ability to manage its finances effectively and generate a substantial amount of cash from its operations. The company's debt level and interest expenses have undergone significant changes in recent periods. Notably, the current portion of long-term debt has increased substantially from $10.6 million to $1,079 million. Additionally, total debt, convertible notes, rose dramatically from $0 to $347.6 million between June 28, 2025 and September 27, 2025. Furthermore, convertible notes principal have skyrocketed to $3,198,600,000. Concurrently, interest expenses have also increased significantly. Total interest expense has risen by $100,000 from $5,400,000 to $5,500,000. Moreover, interest expense has grown by $0.2 million from $5.5 million in 2024 to $5.7 million in 2025. The convertible notes interest have also seen a substantial increase to $88,800,000. These changes indicate that the company's debt level and interest expenses have undergone significant increases, which may have implications for its financial health and future prospects. The financial performance of the company varied across segments and regions in 2025 compared to 2024. Components products performed well, increasing by $147.8 million due to higher shipments of laser chip and assembly products. In terms of regional performance, Asia-Pacific was a notable underperformer, with Hong Kong and China experiencing declines of 17.4% and 9.2%, respectively. Japan also held significant cash reserves, indicating potential financial constraints. The EMEA region saw a decline in overall performance from 9.1% to 6.8%. On the other hand, Mexico and other Americas regions showed improved performance, with growth rates of 13.8% and 1.6%, respectively. Thailand's revenue growth was also notable, but its cash reserves raised concerns about financial stability. The United States region experienced a decline in overall performance from 19.4% to 17.6%, primarily due to trade tensions and uncertain regulatory environments affecting key customers. Management is cautiously optimistic about the company's outlook, citing fundamentally robust, long-term trends in global markets for Lumentum's photonics products. They expect revenue from international customers to continue growing and become an increasingly important part of overall net revenue. To achieve this growth, management plans to focus on innovation, delivering new and current products on time and at competitive prices, and developing technologically advanced products to command premium prices. Management is also taking steps to mitigate risks, including restructuring costs, consolidating operations, and preserving capital. They are concerned about potential regulatory activity, inflation, and market instability, but believe that resolving claims against the company will not have a material adverse impact on its financial position. Overall, management's strategy is centered around innovation, cost control, and diversification to drive growth and maintain profitability in a rapidly changing global market. Concerns about inventory buildup and supply chain disruption. The financial summary highlights recurring concerns regarding inventory buildup and supply chain disruption. These issues are mentioned at various page numbers, indicating a persistent problem for the company. Inventory buildup is a significant concern, with multiple instances of excess and obsolete inventories due to decreased demand or unanticipated reductions in purchases by customers. This can negatively impact gross margins and lead to increased carrying costs. Supply chain disruptions are also a major concern, caused by factors such as vendor impact from liquidity events, global economic conditions affecting demand for products and services, export control restrictions, trade policies, tariffs, and potential bank failures. These disruptions can increase costs and harm the company's ability to meet customer demand. The repeated mentions of these concerns throughout the document suggest that addressing inventory buildup and supply chain disruption is crucial for the company's success. That concludes the financial summary for LUMENTUM Holdings INC. Feel free to comment below, and I will be happy to answer them when possible.